So I'll be making analysis review across major pairs. So to see how market has actually played out for the month of February. So and also make possible forecast for what to expect in the coming month, which is the month of March. So first off, let's get into the business of the day. I'm going to start with Euro USD. So currently I have a chart of Euro USD here. So looking at the daily time frame, the daily time frame is a long time frame. So this will give us a clear view of how the market has been performing throughout the month. So now we can see first thing we're going to do is to highlight the highest price that price has gotten to on the daily time frame and also the lowest price for the daily time frame. And we can see from here that price has actually the highest point price got to is at this point. It is 1.12137, and the lowest point price got to is 1.111780. So that is like how many pips move. So from the up to the down, EURUSD has made 1,036 pips move from the highest point to the lowest point. So now next thing we identify our trend. What is the overall trend for the EURUSD? The overall trend with using the aid of a diagonal trend line connecting the highest point down towards. So we can see that clearly USD has been in a bearish trend. So bearish trend. And for you, whenever you want to draw a trend, you have to make sure that the first 2 points of the price swing connect to the diagonal trend line. So every other one is secondary. So now we can see that these first 2 points are connected and we have an overall bearish trend on Euro USD. So what next? Let's observe. So going back, I will focus into this box right here. This box will be my main focus because this is where copper price is currently at. So the next thing from here, you notice that there is a breakout from Euro USD. So a breakout from the trend line. And before this breakout happens, price has actually been forming swing highs and swing lows. So I will first of all identify the highs and lows. So using this is the lowest point that price got to before it bounced back, and coming here to form higher, a lower high at this point. Yeah, just adjust this. So here we have higher low. We have a higher low at this point, and we're also leading to the breakout. Then we'll form this is the highest point that it got to before market reverses. So we're just going to highlight all those, mark out all those points, all those key points that price has reached. That will enable us to make a good analysis on this particular trade. So this is a higher high that was formed. It's going to indicate it here. So here we have a higher high that was formed, and we also have a higher low here. So now there is one principle with trend line, drawing of trend line. Whenever there is a breakout from a trend line, diagonal trend line in this case, so price always head back to retest the lowest point for a bearish trend breakout. Price always go back to retest the lowest point that was formed leading to that particular breakout. And when you have a trend line, and there is a breakout from that bullish trend line, price always move back up to retest the highest point that was formed that price got to before the breakout. So let me just identify these points currently and see what I mean. So now, looking at this particular trend line, we can see that price broke out. Now, this is the highest point that price got to, and we also have what? What do we notice? Price retrace back to the highest point. This is the lowest point. This is the lowest point that leads to the breakout. This is the wave. This is the movement that led to that breakout. So let me just use this, okay? Now you can see here that this is the lowest point that leads to the breakout. This is the source of this particular breakout here. And what happened next? The next thing is that price went back, retraced back to retest what? The previous low that was formed. The previous low that was formed. And where is our previous low? This is the previous low. This is where market actually closes, and we have liquidity, a lot of liquidity at this point. So market actually comes, price came back to this point to grab more liquidity towards the upside. So I will call this liquidity. So this is our liquidity zone. Price actually came back to this point to retest before heading back up. So now, after that, what happened next? I'm taking this step by step so that you can understand how this analysis, how price move. This is just simply price action. Nothing is this price. There is nothing that beats price action. So now, after the retest, the next move that happens was price went back up to this point. Shit, why now? So USD went back up to form an equal high on the daily time frame. Now, clearly, there is no breakout from this point, from this previous, there is no clear breakout from this previous high that was formed. So price retests and bounces back off. Now, coming back down, since we already have an overview, an overall view of what USD, Euro USD has been doing on the daily time frame, the next thing is that we move towards to a lower time frame to make further analysis. So the ideal, whenever you are using a daily time frame, the ideal time frame to combine it with is what? The 1 hour time frame. However, let's take a look. Let's go further to 4 hours and see what how price has been active on the 4 hours time frame. So here's the 4 hours time frame. Now, what do we have in 4 hour time frame? Let me zoom in a bit so that we can see. Okay. Now, the good thing about drawing a trend line is that whenever you draw a trend line or using a higher time frame, definitely at some point it has to align. There has to be a form of alignment on the lower time frame. And as you can see, this trend line was drawn on a daily time frame. And what do we have on 4 hours? You can see the same thing plays out on the 4 hours time frame. So if you are, this is more like a quality check if you want to be sure that okay, yeah, this particular trend line I'm drawing it the right way. Compare the lower time frame and see whether it aligns. If it aligns, you're good to go. And if it doesn't, then there's something that you're missing. So remember, this box here will be our main focus. This box here will be our main. Whatever happens outside here is none of our concern as it is now. So I'm just going to zoom out so we have a clearer view. All right, on the 4 hours, what do we have on the 4 hours? Um, okay, this is what we have on the 4 hours time frame. Same thing happens now on the 4 hours time frame. We notice something here. Now we have series of swing highs and swing lows. So price has been in the bullish trend on the 4 hours time frame. Let me draw the trend line here, connecting the last point. Now you notice that price has been forming a swing high, swing low, swing high, swing low, swing high. Now this we are now the next thing we're going to do is to identify our highs and lows. Now this is the highest point that was formed. This is a higher high, and we also have what? This is our lower low. Now we also have our another low here, our higher high at this point too. Now leading to the highest point that was formed, which is at this point here, forming an equal high at this point. So now what do we notice? Let's observe. At this point now, what we notice that there is an order block at this point, right? This is an order block at this point, and this order block was what led to the breakout from this mini structure, this internal structure here. It led from after price retest. Let me go back to one daily time frame so you see what I mean. Now, price came to this point to grab liquidity. Price came to this point for more liquidity and head back up. Now, this particular candle here coming to the 4 hours time frame, we notice that this particular after the retest, what happened? It formed a higher high, came back and formed a lower high or higher low rather. So, and this particular from this point, it came and broke out from structure. This is a BOS at this point. So let me indicate it for easy visibility. We have a BOS, break of structure. Now, there is a breakout structure from this point, and now the next thing we do is to trace back the origin of this breakout structure. Where does this move originate? This is a wave, so it came all the way from here, and at this point, you can notice that we have an order block at this point. So this is an order block. We have an order block here on 4 hours time frame. So now what and for one thing I normally use whenever I want to identify because you might have series of order blocks, but how do you know which one is valid? How do you know which one is actually has the potential for price to reject from? Now, what I normally do is that I combine order blocks with what I call the gap, FVG, value fair gap. Now, whenever there is an order block, and there is a gap immediately after the order block, then that has more validity to that particular order block. Now let's take a look at what I mean. Mm, if you notice at this point, we have an order block, right? Order block at this point. Now, at this point now, we have an FVG. There is a gap in between the highest point for the first candle and the lowest point on the third candle that was formed. There is an FVG. This is a gap. So let I'm just going to draw this gap and probably trade it. We have a gap here. So I will add a little shade on this particular gap here. With the green. Now I've highlighted this is my order block at this point, and this is my order block at this point, and this is my gap. So what happens? The next thing is that price is expected since after break of structure, it forms another lower low at this point, and price broke out from this particular low, forming a what's it called, a break of structure at this particular point. Also, we also have a break of structure, a change of character rather, sorry, change of character, because price has initially been moving in a bullish trend now, and price moved back down and broke down from that particular thing it has been forming. So this is a change of character at this point, meaning that price is has indicated an overturn from the bullish run to a bearish trend. So we have a change of character here. Now, since we have a change of character, before we need to have some form of comfort. This is not enough for you to place a bow to say that okay, the market is coming down. So what else do you need? We need to look out into the internal structure at this point to see what are we having here. What is the likelihood of price getting to this particular point here? Is there any likelihood, or is price going to reverse back to this particular high from this point? Now we focus on this internal structure here. Now looking at the internal structure at this point, this is a lower low, and we have this is a lower high that was formed. This is a lower low, right? And at this point, we see from considering the internal structure now, we can see that there is a breakout from this higher high, break of structure internally, leading to a formation of a high, lower low, then came back to also break this particular high, leading to a higher high, right? Now, price reversed back, but this is a pullback back to the previous low that was formed internally. Now, after the what's it called? After the pullback, it only came back to grab the liquidity because at this point, this is a liquidity. This point is a liquidity zone. So price pulled back to gain more liquidity from this point and headed back to form what we call an equal high. Now, after forming an equal high, that's when price came back and broke this internal structure again, leading to also a change of character internally, right? Now, from this point now, we notice that there is an order block at this point. Remember, we are considering the internal structure here. There is a order block at this point that led to this breakout change in character internally at this point. So I'm just going to draw a box highlighting that particular order block. However, if we check this very well, I mentioned earlier that for you to know which order block had the high potential of working out, it has to be accompanied with a gap, a fair value gap. But if you notice here, despite the fact that we have an order block here leading to a break of structure, there is no gap at this point. So, and this is a valid reason why why order block failed, because you can see that price actually came back and sweep it off. This is the reason why this particular order block failed, because there is no gap after the order block. So this order block has been invalidated. Now, using the order block, um, whenever an order block is invalidated, there is what I call the reversal, using the reversal method. Now, once an order block has been invalidated, it also has the potential as serving as a support or a resistance, of which price has a high likelihood of bouncing off from. Now, you can see that despite the fact that this order block has been invalidated, there is a high probability of leading to a change of character. Now, there is a high probability of price retracing back into this particular invalidated order block, and from this point price has there is a likelihood of this point serving as a resistance level, pushing price back into our main order block here, of which we're expecting to buy this trade euro usd from this particular point. Now let me just use an arrow to indicate what I'm expecting. After the break of character, price has already confirmed that it's heading towards the downside, right? However, if you are looking forward to short it, the Euro USD, you will what you are just going to do, you will have to look for a perfect entry. This is an invalidated order block, which is now going to serve as a resistance point of resistance for price to move back, to move down into this particular order block, and we have an everyday gap here. So this particular point is our zone, buying zone. This particular point is our buying zone right now. So for today, before, if you are looking for short euro USD, please you have to need to wait for price to retrace back into this particular zone, at least midpoint into this particular zone. Then before you place a sell entry leading to this order block on the daily time frame, on 4 hours time frame, right? So if you are entering this particular trade now, let me highlight the point of entry. 1.04214. At least once price hits back into this point and closes within, probably halfway or slightly beyond, slightly below this particular line, then you will have the opportunity to place a sell entry for this euro on euro USD, following it up down to the gap. At least that's this point here. Let me see what's the price code. 1.03132, because this is here is a liquidity at this point. Price is definitely coming down to grab this to clear this liquidity. Now, this is our buy entry. This is where we're looking forward to buy euro USD from. But before the buy will happen, price has to come down. And in order to come down, we have to catch, if you want, in case you want to catch this market from here, you buy entry from here and you exit at this point. This is your take profit, and the likely stop loss should be just above, slightly, maybe 1 or 2 pips above the what's it called order block. Now, stop loss at this point, entry at this point, and exit at this point. So let's take a look at our risk reward ratio. From, if you are assuming we're entering at this point to sell, this is 112 pips. And how much are you going to be reaching? You are reaching 6 pips for 112 pips. Can you see that that's really, really huge, right? That's huge. So, and it's also important to also always apply proper risk management based on your account size. Now, this is the analysis. This is what we are looking out for on Euro USD. Let's go back to the daily time frame and see what we have. You can see this is on the daily time frame now. This is where we're expecting to buy Euro USD. Now I'm just going to highlight the points. Now, if you are buying Euro USD at this, so this is our buy zone at this particular order block here. So let me just draw this, targeting this point. So I'm not using trading view. That's why I have to do this manually. So this is MT5 platform, and there is still a way you can check your MT5 to make it suitable for whatever you need. So I'm just going to apply the red. So this is what I'm expecting. EURUSD is a swing trade. Is a swing trade. It has already given the confirmation that the breakout confirmation. Now, but however, if you notice at this point, so you have to be very careful. If you are taking this trade, here at this point should be 1.04214 to be your first take profit. That's if you are buying from this zone right here. So and here should be your second take profit around 1.505 505.550, some thereabout. Because if you notice at this point, this is an equal high. Price has not really broken out from this point. However, should price break beyond this particular level here, 1.05354, then you are good to go towards, you swing it up to this 1.12137. So if you are buying at this point, how many pips are you? What's your risk reward ratio from this point? How many pips are we having here? We are having 914 pips. 914 pips. And how much are we risking? We are only going to be risking 45 pips, approximately let's say 45, 50 pips maximum on this particular trade in order for us to get what's it called our maximum of 914 pips, which is a massive increase of 8.8% increase. So, and if you are buying, if you are taking your partial profit at this point, this is 120 pips. You're risking 50, 40, 45 pips to make 120 pips. So that's really huge, right? So that's like 1 to 3 risk reward ratio. And if you're taking your profit at this point, that's 230, 240 pips, 238 pips, right? So this is the first target. And then we have, this is the maximum target for Euro USD. And as long as price respect this internal structure here that we have on 4 hours, price is definitely going to get to this point. I have 90% confidence rate on this particular setup as long as price respect this particular um structure that we this particular movement have mapped out for Euro USD. So now you can see price is already retracing back up. So you wait probably during the US section, price might have gotten to this point. If not, you wait till next week, and this is what we're looking at for next week on Euro USD. Euro USD. So this is all for this particular analysis on Euro USD. This is what we have on Euro USD. So next, I think I'll be making analysis on another pair similar to Euro USD. Actually, let me see EURUSD. Yeah, EURUSD is also moving towards in the same direction. So you can see that on EURUSD now, I've already made this analysis. I have my entry limit set already for EURUSD. So EURUSD is just the opposite of Euro USD. They move in opposite directions somehow, relatively actually, not all the time, but this is just the opposite, inverse of Euro USD. So we have a bullish trend on daily time frame, overall bullish trend on daily time frame. Now, this is what I mentioned earlier that whenever there is a breakout from the trend, price will always come back to this particular zone. That's the highest point that was formed before that led to that particular breakout. And this is what we're expecting to happen. Price is coming back here to grab liquidity. It's coming back here for more liquidity to buy, to sell towards this side. So, and internally, Euro USD has given us a clear confirmation already because there is a change in character. This is the highest point that was formed. It led to a breakout. Here is a fake breakout at this point. This is a fake breakout because we have a lot of liquidity at this point. So, and also there is no clear breakout that a new low has been formed. So, using the though if you are considering just maybe break of structure, we already have a break of structure at this particular point here. At this point, we have a break of structure here already, but considering liquidity, you can see that this breakout has not happened yet because there is huge market liquidity at this point. So this is a fake breakout. This is the main reason why this breakout is not genuine. So this is where we have our real breakout from at this point. So after the breakout, we have another confirmation, then leading to what? A lower low, right? Lower low. You see, this now we have a clear breakout from the uptrend back to the downtrend. So we already have our confirmation that price is reversing back towards this point. All we just have to do now is to wait for price to get back to the previous high that was formed that led to the breakout. Then we push our sell trigger and move the first take profit will be here at this zone here because if you notice at this zone we have a form of a support level here at this particular zone. So here should be the first take profit if you are entering this trade from this point. So I'm just going to the reason why I put and another was the reason why I place my sell limit at this point is because I have an order block here. Now, I mentioned something earlier that for an order block to be valid, there has to be a gap after the order block. So now, if you check, we have an order block here, and we also have a gap here. And this gap is very huge. We have a very huge gap at this point. And what happened? These are NVG points. Price actually came back to this gap and reject selling to this point. So we made sell little sell minor sell on this particular trade sometimes I think last week. Yeah, last week. So I sold this particular market here from here and I took out my profit at this particular support level before the breakout happened. Now this is another block. This is the reason why I placed my first entry at this point because there is a high probability that market might just this is a midpoint. Price might hit this point and reverse back, might not necessarily get to this particular point at the highest point because there is a wick. We have a wick at that particular point. If you look at this point, there is a wick, which is indicating liquidity, right? So price might, if smart money is involved, definitely price will get to this point and trigger what's it called and clear up this liquidity before it head back down. However, in the absence of smart money, in order not to miss out from this particular trade, I use the order block 50% entry. So that's why I have my set limit. So if the price reverse back into this point, towards this particular point, I'm going to be placing more entries to sell towards to this point. And I will be taking my partial profit at this point here, 0.89178. Then probably I will allow the rest swing it to this point. So let's check our risk reward ratio. Assuming we are entering from here, this is the main target. We have 744 pips. That's also 8% decline. 744 pips. This is what we are looking out for. And how much are we risking? So your stop loss should be just above the highest point that was formed. That's the previous high. And this is like 50 pips. So currently now we are risking 50 pips for 712 pips. And you can see that this is really a trade that is worth taking. So this is what we are looking out for on Euro Swiss franc next week. So today is Friday, so there is high probability that price might not get to this point because this is a daily time frame. However, next week we should be expecting this setup to be active. So if you are trading your USD Swiss franc, kindly look out to this. However, we can still make what's it called, a minor bullish move. Let's see if we can generate any bullish signal. Let's take a look at 4 hours. What do we have on 4 hours? So on 4 hours, we can see that we have a swing high and swing low. This is the highest point on 4 hours that was from starting off from this point. So let me just draw a box so that we have a main, where we are focusing our analysis on for today. I'm trying to make an adjustment to this. All right, next thing I'm just going to. So we're focusing on this box now here, internal structure. Now, what do we notice? First thing first, when you are moving on to make your analysis, you identify the swing highs, the highs and lows. So now, where is our high? We have our highest point to be at this point, right? Now, guys, note we're considering 4 hours time frame now. This is a 4 hour time frame. So looking at the 4 hour time frame now, this is the highest point that we have. And where is our lowest point? This is the lowest point that we have on 4 hours. Highest point and lowest point, right? So what are we noticing? We can see that price has formed. This is the highest point, came back to form a lower low, higher high, lower low, higher high, lower low. Sorry, what am I saying? Higher low rather. Pardon me. Then we have our lower low at this point. We also have a minor high here, and we have our lower low at this point. But looking at it very well with another point of view, you can see that it seems like we have a trend. Now, I'm not going to pick this because here seems to be a liquidity, so I'm just going to pick it like this. Okay, let's just pick this point, right? And let's see from this point, let's see, do we have any trend here, right? So, if you take a notice, we have a trend here, more like a diagonal channel forming currently on the 4 hours time frame. And what we also have, okay, let's identify our highs. This is another high, this is another high, and also this is another lower high that was formed. Now I'll be picking this point here. This is another lower high that was formed because this particular point after its recent price pulled back but didn't get to the point. There's no breakout here and leads to this point. So these are higher. And now this is the lowest point that was formed. Now price has actually came and broke out of this particular high. There is a change in current. This is a BOS breaking structure at this point. We have a breaking structure at this point. So let me just indicate it here. Now, this is a breaking structure, right? So, and what do we have here? We can see that this particular breaking structure is from an impulsive move. This is a long candle impulsive move. And what happened? It came originally from what's called an engulfment. bullish engulfment here, indicating that there is a possibility of reversal, right? Now, and if we really take a look at it closely, we notice that there is a gap here. There is a gap here. So, and what did I say about order blocks? That whenever there is an order block accompanied by a gap, immediately by a gap, there is a high possibility of price retreating back into that particular zone and heading back up. Now, this is what I have, right? This is the first gap. So I will rely on this only. Let me still take a look at the lower time frame to see what we have. Now, we can see there is also another gap at this point, which led to a minor breakout from this particular previous high. Now, we are just going to identify the what I call the FVG zones. These are gap, value fair gaps. This is another gap here. Now, internally, this particular candle now broke this particular candle here, right? So this is a break. There is a minor break in structure at this point also, and we have a gap. So these are the 2 points I have currently. So in order to check which of these gap is going to be our entry point for a buy direction, so I will apply what I call the um, Fibonacci retracement. I like to combine this Fibonacci retracement. So drawing from the low that was formed, which is this point, to the high that was formed. Now, the aim of this Fibonacci retracement is that whenever I have an value fair gap that sits below, just close to the 61.8%, 61.8 Fibonacci level, that's a golden point. And now what do we see? We can see that okay, now this is our first order block, and this is our first gap, this is our second gap, right? Drawing a Fibonacci retracement from the connecting the lowest point to the highest point. Now our main focus is the 61.8%, 61.8 fib level, because that is the golden zone. I've tried it many times, and you can also go back and have what's it called, a back test using this Fibonacci retracement. Whenever you have a multiple FVG, it can be very, very confusing. So you, because you won't know which one to pick, which one has the highest potential of price rejecting from. So you apply the Fibonacci retracement, combining the lowest point to the highest point of that particular week. Now, you are only going to focus on the FVG, that's value fair gap, that is closest to the 61.8 fib level. So you can try this, back test it over the course of the weekend and see what I mean. It always plays out. So now I have my two FVG here. I don't know which one to pick. I apply my Fibonacci retracement, and you can see that at this particular midpoint, just 50% into this particular FVG, we have what, 61.8%, 61.8 fib level. So this particular level now, it serves as a golden zone. So this is where I'm looking for price to reverse. I'm looking for the price to retrace back to this, into this midpoint of this FVG and bounces back up. So I'm just going to clear this. This is no longer valid for me because my main focus has been shifted to this particular FVG here. So I'm just going to clear what I have. So this is becoming too rowdy. I think let me delete let me clear some of these lines. So the lines is just to aid my analysis. Once I have my full analysis done, I don't need those lines again. I don't need those points again. So I will just focus on my points of interest. Now, this is what I'm expecting. am I expecting price to hit back into the zone? Then, okay. So this is what I'm looking out for on the USD Swiss franc on 4 hours. 4 hours. I'm looking forward to buy this trade. Immediately price reverse back into this FVG, closing midpoint or slightly above it. I'm going to place my entry. Now this is a 4 hours time frame, right? Now the next thing is to whenever you're done making your analysis, you have to check in with risk management. So to see if this particular trade is worth taking. And in order to do so, you have to calculate the number of pips and also to identify your stop loss, because entering a trade without having a stop loss in mind is very very risky. So the first thing after identifying your entry point is to identify your stop loss. Stop loss is very important, guys. It's very very important. So now my possible stop loss now, considering this gap, this is 7 points. If I'm placed for my entry, this is 7 pips, right? Now, because I have a major liquidity at this point, there may be a tendency of price actually coming back to clear off this liquidity, right? So I will place my stop loss at this point to give the trade enough room to play out, because this, if I'm putting my stop loss, this is an ideal place for me to put my stop loss just below the FVG, which is just 6 pips, right? Now, but there is a tendency that my market can use me, smart money can use me to grab liquidity. In order to avoid that, I will place my stop loss at this liquidity zone here, which is 30 pips, 31 pips, right? Now, what is my target? My profit target is what? 200 pips on this particular trade entry, 200 pips. So you can imagine you are just risking 30 pips to make 200 pips. You know it's worth it, right? If so, this is the risk management. This stop loss should be here. If you are using a bigger volume, this stop loss should be here. But there are instances where market price will push down to this particular point only for it to close within the gap. So in order to avoid being used as liquidity, which can be very, very annoying and frustrating when price shoots down, hit your stop loss only to bounce back to your direction. So it is important to give this trade at least 50 pips, enough room to play out. So this is the analysis I have for you for on Euro USD Swiss franc. So you can watch out and see. Let's see how it plays out. This is likely to happen today, and considering this is a 4 hour time frame, and if not, we expect it to happen next week. This is a forecast for next week also. So let's take a look at what 1 hour, how 1 hour is looking. Now you can see at this point that our point of entry on the 4 hours time frame also aligns with the 1 hour time frame, because this is our point of entry. This is our other value fair gap that we generated on the 4 hour time frame, right? This is the 4 hour time frame now. And what do we notice? On 1 hour time frame, you can see that there is also a gap on the 1 hour time frame. It falls within a gap on the 1 hour time frame. And this gap now led also to what? BOS. This is a break in structure, also on 1 hour. So all these additional information are just adding more confidence, more potential to this particular trade, because with this I'm seeing now, I have no doubt that this particular trade is going to play out. As long as price reverse back into this particular zone, this particular trade is going to buy. I'm 80% confidence on this. So there is no signal, no analysis is 100%. But with what I'm seeing currently on USD Swiss franc, I have 80% confidence rate of this market move playing out. So, and we can also see a major change in character. Let's take a look at 4 hours. This is what we have POS on 4 hours. What do we have on 1 hour? You can see the same thing happen on 1 hour, right? So This is our entry zone. I'm just going to strip this a bit. So guys, this is the analysis I have. So far now we have made analysis on USD, Euro USD, and this is the our analysis on USD Swiss franc. This is what we're expecting for market to play out from today till next week, guys. So if you really enjoy this video and you would like to, please do subscribe to my channel for more insightful videos like this. I always make analysis and it's always right. Sometimes making the analysis can lead to a generation of a live signal which we take and in order to make some profit for ourselves. So now this wraps up the analysis on USD Swiss franc. Let's just watch out and see how the market plays out. So making analysis is very important to keep it very simple, guys. Complicate whenever you have to when you have your analysis is you have too many, just keep it as simple as possible. Whenever you have too many information, it complicates, and at the end of the day, you will be very, very confused on which one to follow. So too many information is bad. So keep it simple, back test, check out from what has happened in the past, check out what's it called, back test your strategy, see how it plays out. That's the best way to learn and see how what's it called. And whenever you see such move in the future, you'll be able to know that okay, yeah, this particular set, this is to give you a confidence rate that okay, this is going to happen. This is what is likely going to happen. So, but mind you, there is nothing that beats price action. There is nothing that beats price action. So every other thing you use, indicators are just secondary. So whenever you want to analyze the chart, it's best you start by analyzing a plain chart. So then before you start applying your indicator or whatever it is. So now this MACD I have here is just this MACD is just to give me additional confirmation, maybe probably after making my analysis. So I will now check out with the MACD to see if it correlates. So it's just for sake of confirmation, but not really for to make the analysis. So indicators are good, yeah, but nothing beats price action. Now the next pair, um, okay, let's take a look at another pair. So from last week, we made analysis on this particular pair, Euro USD, Pound USD. So currently now, we took this trade from here. We have an order block here leading to what's it called a break of structure, and we were waiting for what's it called a retracement, which happened midpoint. We took this trade from here, and I think I took profit somewhere around this point. Now, pounds USD is also going to be a uptrend because here we have a liquidity and price. Here we have a point of this is an inducement point at this point. Many buyers were swept out yesterday from this particular zone because many were expecting that okay, price will this is an order block, yeah, but because this order block did not really lead to a break of structure. This particular point led to a break of structure, and also was accompanied by a gap, right? So many traders place a buy trade at this particular point here, and markets end up using them for liquidity because this is a major liquidity zone. And accompanied with the news yesterday on the US jobless claim, which happens to be very high and which made USD to be very weak, the market, so it adds more momentum, selling momentum for price to hit this point. Now, at this point now, this is an entry point. This is where I entered sellers, buyers rather, will be looking forward to enter the market. And you can see so far, price has reversed, right? So the possible target for pound USD because the trade is already active. So it's this point, the previous high that was formed from yesterday. So this point here should be the target. So stop loss is just below this point, and with this particular move, since it's a what's it called 4 hours time frame, so probably it is will be recommended if you're already in this trade to tighten your stop loss or probably set a break even and follow the market rate fee down to the what's it called. You'll just swing it to the next week. And if you are a daily trader, you can hold this price and probably when it gets midpoint to this point, then you can exit, take your profit, and rest for the week. So that's the analysis we have so far. So AUDUSD has been in a major downtrend. So it broke out from this particular level yesterday, this channel here yesterday. So this point, this trade was taken from this point because we have another, there's a retracement move and it moved down. So exited the trade around this point, this previous low here. And also we can see that price has actually been moving in a downward momentum. So on the daily time frame, this is what we have on the daily time frame. Note for euro, Australian dollar, you watch out for what's it called? If by next week, the focus for next week using this trend line. If you notice all these pattern, Euro USD, what's it called? USD Swiss franc, AUD USD has broken out from a trend using the daily time frame, broken out from the trend. Also, all what they are doing now is to come back to grab liquidity for a buy direction. Euro USD next week the focus is buy. We're expecting to buy Euro Australian dollar by next week. As long as it gets to this point, because you notice there is a gap here, huge gap at this point. Now, this is a likely possible target. So market is going to come to this particular zone. So if you are missing any trade, look out for this. By next week, this is going to happen. I have high confidence on this setup, high confidence rate on this setup. This is when USD is looking forward to bounce back. It's already given us all clear confirmation already with a breakout of this is a breakout. We have a change of character here. So and price is just coming back to grab liquidity. So a lot of buyers has been kicked out. A lot of buyers have been kicked out already. So all this liquidity zone, this point, liquidity. So we have our liquidity point at here. So some so this is our liquidity, and here we have an order block here. This is the order block that led to this particular breakout. Considering the bigger picture, right? So this is where you are looking, buyers are looking for to enter this market. So if I did, the stop loss is going to be wide, considering that the previous low that was formed is at this point. So liquidity and the price, what's it called? The stop loss is going to be wide. However, it is worth it because there is a high chance of this setup also playing out as long as all criteria has been respected. So this is a buy entry zone at this point. So the entry zone is within 1.0.61643 down to 0.61367. So this is the entry zone and this is the stop loss. So let's calculate. This the stop loss is going to be wide. It's going to be wide. So we are looking forward to a stop loss of 80 pips. So if you are giving this particular trade space to run, which is actually working because smart money smart money are looking for currently smart money are pushing the price towards this side, clearing all buyers, clearing all buyer stop loss. So this is the point at which price has the highest point of retracing. So the ideal point of entry is at this particular zone here, this particular zone. So with the stop loss, maximum stop loss of 780 pips, maximum stop loss. However, you can, if you are, you don't have, if probably if for a scalp, maybe a retail trader, you can make your stop loss, set your stop loss to be around this point, which is just 30 pips. So for a retail trader, I always recommend you use a stop loss not more than 30 pips. 30 to 50 pips is okay. So now, because this is a swing trade on daily time frame, we are looking forward to 755 pips profit. So this is a swing trade. I wait. This is a forecast for next week. This is going to happen. As long as all criteria is going to be met, I have 80% confidence rate on this particular setup. It's very simple, but it's powerful. So that's that for Euro, Australian dollar. So USDJPY. USDJPY also is also similar. Daily time frame. All these pairs have been forming a similar, so starting from this next month is going enough, a huge, is just for swing traders. If you're a swing trader, you are looking forward to make a huge money from the market, as long as you are being careful, taking calculated risks. So as a retail trader also, once you have an overall map of what the market is, the roadmap for the for price, you can also scalp in between and follow the market. But it's better, it's mostly advisable to always follow the trend. Follow the trend. So currently now, I made this analysis from my live video from yesterday, and price is already coming back to this particular zone here. But we have set a price alert, so looking forward to, because here we have another, what's it called, an engulfment at this particular point, and we also have a breaking structure at this particular point here. Now, with accompanied by a gap. So this is the point of, this is my entry point of interest. So let me just grab it. So this particular trade, this is the entry point, entry zone. Once price gets into that box, that's at 151.907. So down to this point, that's like 1020 pips. But if you are following it down, taking maximum profit, it has 136 pips. 1,136 pips on Euro USD. Now, major rate, it's this is where my stop loss is just 46 to 50 pips. 46 to 50 pips. So this is a swing setup also. All criteria are on. There is a breakout, retracement, retest, breakout. So this is what we're looking out for. So the reason why I picked this entry, because Australian JPY can be very, very funny. So I'm risking just 50 pips at this entry. However, if I'm to take this particular trade, this is my main entry, taking the optimal entry, this is the highest point, because this is the highest price that was formed that led to this particular breakout, and there is high tendency of price coming back to this particular point to test. However, for this is just for retail entry. If you're entering at this point, the ideal stop loss, take profit should be at 150.276. So price Euro USD, your USD JPY can be very funny. So price might reject from this point. So in order not to miss out from this particular trade, that's why we have generated an entry at this point. Use an entry at this point. Let's take a look at 4 hours. So we can see that at this point here, this is a major point of interest. So looking forward to price to hit back this point and bounce back. But having a stop loss of nothing more than 50 pips on this particular, and should price break this point, then the best is to wait till price hits this, come back to grab more liquidity at this highest point, then follow it down. So normal entry. So yep, that's the roadmap. So so far we have made analysis on USD chef. We have made analysis of pound USD. The pound USD already going up. So this is the target for pound USD. So we have for what's it called Euro USD is what we're looking out for. Australian dollar also. You can see the move is happening already. So this is what we have. And USDJPY, this is also what we have. So so far we've made analysis and forecast for next week on these four pairs. So watch out for these four pairs and see what we yeah. Yeah, for gold. Yeah, I won't be making analysis on gold today. So because the market is looking a little bit unstable. So by next week we'll be making analysis on gold to see what we should be expecting. Yesterday gold was a major downtrend. Yeah, we make what's it called made analysis on gold at this point to sell at this point, and so far you can see that price actually came. So you see, these are chart histories so from yesterday. So with gold yesterday, I was able to meet my daily target, so I stopped trading at this point. So and see I still continue moving downward. So guys, this wraps up the analysis and forecast for next week. So guys, if you enjoyed the video, you find it educative, so please do subscribe to my channel for more exciting videos and also market analysis. So thank you. I remain RFX and do have a lovely weekend.